What are your overweight recommendations? You're not hot on banks. You think consumer is slowing down. It's too early to buy investments. So if a client walks up to you and his queries, give me some ideas which I should buy and hold on, where I can make
So
money.
you would have asked me buy ideas for 5 years and market would have gone down, right? So the problem in markets like this, which are range bound at best, is the fact that, markets are not going anywhere. And, sort of, therefore it becomes very, very difficult to, and we are always bullish, right? So we sort of think what to buy. When the overall markets are down 20% over the last 5 years, we've all been sort of thinking of what to buy. End of the day, it's a relative game when the overall environment is lackluster. And to that extent, our view has been that you've got to buy companies where the earnings protection is high. Now, this could be your utilities. This could be, and obviously, we would underweight telecoms at higher prices of telecom, but it could be that the sector is starting to stabilize. That could be telecoms. It could be, pharmaceuticals, where there is a very clear identified opportunity of patent expiries, rupees in their favor. And the sector dynamics for next 3-4 years are extremely favorable. So you got earnings growth, and the rural, the penetration of healthcare is still very small. So the growth in domestic market is still very strong. So those kind of companies, obviously. But, obviously you'll not be able to make 100% of portfolio of these kind of names, because the fact is that there is still a very large weightage of banks. So within banks, you need to be more defensive. You have to have some financials in your portfolio. You can't make them zero. But I think,
buy the private names, don't buy the PSU names?
That sort of bias, correct.
What are your high risk, high return ideas?
High risk, high return ideas. I think, so basically, the high return in large caps, I think, is going to be very difficult from these levels. So if you're looking at high return, then you'll obviously have to tilt towards mid caps. And then, so we have a bunch of mid caps we sort of like. A few of them have been destroyed by policy action. Like gas names, have sort of evaporated. But so we cover. So for example, Nuclear Auto, so we really like that company because we think there's a global cycle in offering and there's a big benefit happening. But you will get into stock specific sort of when the overall macro is very weak or slow. Then you're not really betting on an economy trend to make your returns. You're probably betting on company-specific factors, some narrow industries which will do well in an overall environment where things are slow. So those names will be more of a stock picking sort of scenario than anything else.
So apart from McLeod, anything else in the mid-cap space which excites you?
As I said, these will be, so there will be some smaller banks which still have growth, for example, like IndusInd Bank, because it's still growing very strongly.
Do you think IndusInd is small? It's got a decent market cap?
Yeah, but the fact is that if you are betting on market cap gains in a large market, a small bank which is still growing at you've seen, HDFC Bank sort of reminds you of that in terms of growth. Obviously, HDFC Bank done this for a long period, compounding at 30%. But smaller companies in a decent size market, which are executing well, will tend to do well over a period of time. Then we like, for example, in tech space, even though there are some short-term headwinds, we still like smaller companies compared to larger ones, where we think there'll be more headwind. We like, actually autos is sort of now we're underweight on. And I think there might be some case for gas names if really the overall, for example, PLNG, etc. There will be a case primarily because the consumption still is in the up. But obviously we need some clarity on the regulation, because clearly the regulation has come on their side because of the court verdict. But still there's, investors have become extremely wary of buying anything in India which has got any whiff of regulatory issues involved. But there might be a case for doing that. And anything which has got regulated returns, frankly, but you don't have too many small caps there. But a Power Grid, for example, we really think that stock will do well. It's done really well. It's held down. It's really appreciated in the market where market has gone down on overall basis.
What role do you think IT stocks will play next 1 year? Because the headline growth number for at least large cap IT companies seems to be slowing down.
So I think there are two things which have happened in IT. Clearly, global growth environment has weakened. Europe is in a funk, and even US, clearly the volume growth has not been as strong as was expected, despite the US recovery. Right. So clearly, that essentially means that from 18% sort of growth, volume growth number, you've gone to 12 to 14%, even lower in cases, and that has been a big disappointment. On the other hand, rupee has depreciated. However, if you look at the forecast of rupee and the belief in this level of rupee sticking is close to zero. So the fact is the benefit, IT stocks have not really benefited from rupee depreciation because people continue to think there are a lot of people saying rupee will go back to 50. So go back to 50 and the sector growth has done really badly. In that case, you obviously won't buy IT stocks. But I think on a relative basis, the sector should still be all right, especially from these levels. It could have negative reaction to the current results which is coming up, because I think there has been clearly a demand side weakness, and that might mean that going into the results, the stock might be volatile, even down after the results. So one has to be cautious around that time. But I think in a relative context, IT is still fine. Actually, they've done okay in relative context to the market in last 3-4 months. They outperformed the stocks.
But within the IT space, is the pecking order changing? It's no longer Infosys?
No, it's no longer Infosys. You're right. So our thing is that sort of in very large, the absolute large caps, TCS is what we liked. We sort of been liking better, and in mid caps we sort of been pushing, or smaller companies, not smaller, but in the second rung, HCL has been a top pick in the sector.
So before we wrap the show, final question, what is your big call for FY13 and then beyond? Sit on cash, protect your capital, time to high beta has not come yet?
Yeah, time to high beta can, I don't think there's really time for high beta. Our view has been that markets will be flat through the year. And you can go wrong by 5-7% here or there, but I think the enabling conditions for the market to do well has to be the growth, that sort of underlying growth. And that is what you pay for, especially in an emerging market like India. Until the time you get clarity on that, and you're convinced that growth is going to come back, even I'm not talking of 8-9%, but I'm talking of 7-7.5% visibility. I think it's very difficult for the market multiples to move beyond 13-14 range. If not lower, I think they could probably be lower than this.
But you will be very surprised if you go back to December lows, which is 4,500, 4,600 on the Nifty.
So that typically happens when you have an external event on top of the local macro. So fact is, local macro is weak compared to the past, but you go down to those levels when you still really have a stress in global. So European crisis, every time you sort of hit a crisis, you tend to deteriorate far more. I would say though, in rupee terms, you're probably there. So from a dollar investor perspective, we did touch those lows, and from a local investor perspective, no, but from a foreign investor perspective, we did touch those lows.
Prabhat, on that note, really appreciate your time. Thank you for joining us on Market Makers.
Thanks, Nikunj.
That's it on this edition of Market Makers. I'm Nikunj Dalmia, signing off.